just last week or the week before, we had silver from a technical standpoint really starting to break out of a wedge pattern. And it was a very bullish formation where a lot of the analysts, the technical analysts, were expecting a much higher price as a result of it. And you see a ridiculous smashing by the commercial banks where they came in and increased their short position to the open interest is so many times greater than the availability of bars to be delivered. Many times greater. This was done specifically to keep the price of silver from rising.
The silver market experienced a roller coaster ride during this Monday's trading session, displaying initial declines before bouncing back with a surge in bullish pressure. The announcement of the U.S. government's intention to issue significant debt has captured the attention of silver market participants. This move is expected to increase government spending, which in turn could potentially bolster precious metals like silver. As a result, the overall market sentiment has turned optimistic, laying the groundwork for a potential rally in silver prices. Andy Schectman, CEO of Miles Franklin, highlights that commercial banks aggressively increased their bets against silver to counter this positive momentum. This move was intended to prevent silver's price from going up and getting more attention from investors. Many silver investors believe that silver prices are not moving naturally, but are being guided by powerful organizations like central banks or big banks using tricky trading methods. This has led to concerns about the fairness and transparency of the silver market. Schectman mentions that despite the manipulation, there is potential for silver prices to rise significantly because of the leverage, borrowed funds, injected into the market. Let's watch snippets from Andy Schectman's interview, but before getting into the video, make sure to subscribe our channel and give this video a thumbs up. Currently, 95% of our viewers have not subscribed to our channel. Our next goal is to reach 2,000 subscribers. Please consider subscribing to our channel and helping us reach our target.
The majority of the advisories, the majority of the funds, they all employ technical analysis into their decision making. And this was an overt attempt to keep, I believe, silver from going higher because it was going to trigger a pretty significant buy signal. But the lack of enforcement by the CFTC is startling. This is not how free markets should be operated, and it's completely obvious what had happened. It's a drive-by shooting. They flushed everybody out, and this becomes a very dangerous game when you have many times the open interest as our bars backing the ability to be delivered. And so, yeah, that is a big deal. People wonder, well, why isn't the price going higher? Well, my question would be, why isn't the CFTC enforcing what is a ridiculously concentrated short position by a couple of the largest commercial banks, probably the biggest chief being right now, Bank of America. And, this is not going to change until it does, but it's the type of setup where you could see a very significant move higher, just simply based upon this leverage that is being injected into the system, and it's being leveraged without any governance, without any checks and balances. And everyone should read Ted Butler's article from yesterday or the day before. It might even been today. I'm a little behind on my research, but I just read it, and that's exactly what he's saying, is that they came in overtly, smashed the heck out of it, and to such a degree that it's pretty hard to see any real rationale to do it in an environment where we have a shortage of silver, where there's so many reasons the price should be going higher. But I will say, at least from a standpoint of trying to remain optimistic, we are ridiculously oversold, and I would expect we are very near the bottom of this once again, this flush out by the commercial banks.
In 2022, the total global demand for silver amounted to 1.24 billion ounces. It is forecast that the worldwide silver demand in 2023 will be slightly lower, at nearly 1.17 billion ounces. Schectman states that there's a growing global demand for precious metals like gold and silver, not just for monetary reasons but also for industrial and military uses. This demand is putting pressure on the availability of these metals. Silver industrial demand rose by 5%, physical investment increased by 22%, and jewelry and silverware rose by 29% and 80%, respectively, leading to the total global silver demand milestone. Since 2020, the global total has increased by 38% as world economies recover from the pandemic. Global demand for silver rose by 18% last year, creating a huge supply deficit, the Silver Institute said on Wednesday, predicting more shortages in the years to come. The silver market was undersupplied by 237.7 million ounces in 2022, the Institute said in its latest World Silver Survey, calling this possibly the most significant deficit on record. Schectman mentions that there might be a strategy to remove available silver from exchanges before a realization that there's not enough to meet demand. Let's watch Andy Schectman's interview.
I mean, it's been very easy for the commercial banks for the West who wanted to support a bond market forever with interest rates so low. With interest rates rising, everything is starting to become a little bit different and a little bit riskier, and you're starting to see things break. This is a game that becomes very, very dangerous when you have global demand, whether it be in military, whether it be in industrial, or of course, the big monetary push that we've seen in gold and silver, where it's not just silver. You see the same thing with gold, and yet the central banks bought more in the first half of this year than ever before. And so, look, this is a deal where it was easy to suppress the price when nobody wanted it, but you're seeing such a need and demand for it on a much higher level than the retail. It's interesting that Ted Butler will cite a real shortage in the 1,000-ounce bars on the wholesale level. And I guess when you say there's just roughly 30 million ounces in the registered category, that's a true statement. When you see the deliveries off of the exchanges all over the place, including huge redemptions out of SLV and GLD, which are the authorized participants doing it very covertly, the demand at a level much higher than where we sit is real, and as is the shortage of availability. It's certainly based upon the open interest. It's many times less bars backing those contracts, where if they stood for delivery, well, we'd have a problem. That's interesting because we've seen the premiums on everything come down and the demand on the retail side come down. Now, I will say this, it's interesting that today we saw a slight increase in the Silver Eagle premium. And so, maybe people are starting to wake back up again. I'm not quite sure, but I would simply say that I do think that there's something going on much higher than where we sit, and they are using suppression of price and of rhetoric and this environment to really have their way with the market, and I would argue ultimately continue on their plan to drain the exchanges of the investable silver before everyone wakes up and says, hey, I want to take delivery too. But it'll just be very obvious that there isn't enough supply at that level to meet that kind of demand. And we're talking, really, really high industrial level or military level, where look, we've sent off so much of our artillery, yet there is silver used in the guidance systems of so many of the advanced weaponry that we see. It's needed in military, it's needed in green and digital applications. It's still voraciously accumulated as a monetary asset. The story isn't over with silver yet, but it's a frustrating one, and I get it. It's one that I think is trying the patience of everyone, even the most logical, ardent gold and silver bulls. I think they have a hard time with the counterintuitive nature of it and the fact that it just continues to drag on and on and on until it doesn't. And I'm very confident we will see that moment based upon the demand that we see at that level and really the desire by the big players to do all they can to keep it from going higher. You can't do that when the system really starts to break. And the question is, how close are we to that moment? I would argue closer than most people would give credibility to.
Do you think commercial banks are manipulating the silver market? Do you think the global silver shortage is a sign of things to come? And if so, what can be done to stop them? Let us know in the comments below. That's all from us. If you like this video, please like, share, and subscribe to our channel and click the bell icon to be notified when we release new videos.